Kraken is launching a Defend Crypto Fund to take on the SEC and the antiquated security laws in the United States. What is happening and what does this mean for the crypto industry? And let's just jump straight into this story, guys. And look, crypto is under threat at a regulatory level in so many ways. Just last week, I covered the story about the FATF and their devastating proposal to enforce the travel rule on crypto firms, which is likely to set the industry back years if it gets adopted by member countries. Now, that is unlikely to happen anytime soon, mind you, but it is still an assault on the industry. Then, of course, we have the constant boogeyman of terrorism and money laundering and hurting of puppies and all these other things which allow the regulators to continue to tighten the screws on the crypto industry. Well, most anarcho-capitalists just say, hey, you know what? Screw the man! Who needs permission for crypto trading anyway? Well, I agree. I'd love to have a nice free open market without all these regulations. Damn the regulations, but they're here. And we have to grapple with the fact that any exchanges doing fiat to crypto purchases require KYC, which require regulation, which require government bodies to oversee those regulations. We also have to understand the negative effect that the SEC has had on American investors, excluding Americans from investing in ICOs, saying that everything, or nearly everything, is likely to be a security. Now, some say that it was a good thing for Americans to be excluded from this because of all the scams and lost money and all this stuff, but I say let the markets run free. Let people buy ICOs if they want to. Because particularly in the US, the laws are seemingly made to keep the rich rich and keep the poor poor. And they do this by excluding people without enough money from actually getting a chance to do anything but go out and buy lottery tickets, which is a massive waste of money. The things like these accredited investor laws should be seen as an absolute scandal, but not enough people know about them or even care about them. These laws say that you can only invest if you are already rich. I mean, WTF, that's some total BS. If you tell me that some dude who just inherits $1 million from his dead uncle is somehow a more sophisticated investor than the guy who has spent months studying investing books and taking courses and learning charting and all this stuff, but only has a few $1,000s? No, that's crazy times right there. Obviously, you can still go out and buy Bitcoin rather hassle-free in the United States these days, and you can invest in stocks via apps like Abra and Robinhood and a whole range of other services. But actually getting into those early sales remains something that is elusive for the average investor in the United States. And that's a crying shame, to be honest. Then, of course, we can factor in the Bitcoin ETF and the Bitcoin futures contracts and all of that fun stuff into this regulatory mess. But really, the tokens being defined as securities is a giant mess. And all of this has come together to make a situation of regulatory uncertainty in the United States that is stifling innovation and restricting the flows of capital. Locally, we've seen some states like Montana, Wyoming, and Colorado who have all exempted crypto utility tokens from their security laws locally, but the federal government has not budged on their tough stance in regard to securities. So when Coinbase recently closed their political action committee, it seemed that all of the concerted effort to go out and actually challenge the government was finished. And then in walks Ted Livingston of Kick with financial backing of Coinbase, Circle, Masari, Shapeshift, and quite a few other personal investors as well. They are putting up $5 million for what is being termed the Defend Crypto Fund. Now, they are also accepting contributions if you so desire to chip in a few bucks for the legal fund. Although, to be honest, considering that Kick, via their Kin ICO, raised $98 million, there is no reason anyone should be giving them any money. Keeping it real, guys. Keeping it real. And since the ICO investors, since the time of the ICO, have watched their investment wither into nothing, which is not unique to Kin, but there is that to consider, that I don't think they have much of a strong community left. So I just want to make it clear, this is not a promotion of Kin or a defense of their token or of their media app or anything of the sort. I could really care less about Kin. Looking at why it is important that someone is finally standing up and challenging the SEC on this issue. Because for far too long, the SEC has been shaping the future of cryptocurrencies and the cryptocurrency industry in America, but behind the scenes, without any kind of real challenge, with companies that have been challenged simply deciding to make settlements with the SEC versus going to court, which would be much more costly than just paying the fine. And these settlements that are being made are setting a dangerous precedent, and they are stifling innovation in the United States when it comes to this innovative form of fundraising. Now, the United States, of course, is one of the biggest and most important markets in the crypto industry, so seeing a change in this regulation would be big. The SEC keeps saying digital tokens are securities and that many cryptos themselves, which are already on the markets, may also be securities. But can the SEC actually prove it in court? Well, it seems Kin is going to make the SEC put their money where their mouth is. This is a case that could serve as the new Howey test for how cryptocurrencies are regulated inside the United States, particularly, of course, initial coin offerings. Maybe nothing will change. But maybe, just maybe, some new positive precedents could be set in this court case, because crypto assets are inherently different from other asset classes, and the Howey test was originally made back in 1940. We've advanced so much since then. It is not the same world. It's crazy we're still using these antiquated laws. We desperately need to update the legal structure for the crypto industry in the United States. The Howey test needs a good, old-fashioned, solid update. Because right now, all the US regulators seem to be accomplishing is encouraging innovators to go elsewhere. They're stifling innovation inside the United States at a critical time. And of course, they are limiting opportunities for American investors. The worry here, of course, is that Kin may really not be the best company to try and set this precedent with, as Kin's journey from ICO to now has, to be honest, been quite a troubled one on many fronts, and the app continues to be struggling in terms of being relevant. And that's not even considering the crypto token that they had the sale for. And that if taken to court, Kin might be deemed a security, which actually would set a negative precedent of further enforcement and crackdown on the industry. You have to keep it real that this Defend Crypto Fund is actually more of a Defend Kin fund, keeping it real. But still, if Kin does win, it could have very positive benefits for the entire crypto industry in the United States, so there is that. Of course, up until now, all these other companies that have been served enforcement notices have just rolled over and taken the deals that were put on offer by the SEC. And while it is easy to demonize the SEC as being the bad guy, they're not actually anti-crypto. even though they sometimes get painted as such. The SEC has guidelines, and they follow those guidelines. Taking a legislative approach at a higher level might even accomplish more than this court case. We see this playing out with the ETF situation where they're not actually totally anti-crypto, and that's something to keep in mind. They've actually come out and said that Bitcoin and Ethereum are not securities. Of course, that opens the door for those markets to exist and flourish and thrive. And to be honest, if you're a Bitcoin maximalist, then you probably don't care about anything that I've been saying here and probably welcome the SEC coming in to crush the ICO market in the United States. But I think that the ICO market can deliver a lot of value. And yes, ICOs have been a mess. There have been some great ICOs that have made a lot of money for investors and provided real value. But lots of people lost money too. And that's something to keep in mind. Funnily enough, this week the SEC is actually hosting a crypto forum with industry representatives to try and figure out how to best regulate the industry. I think that they're showing that they're not actually as out of touch as they might sometimes be painted in the media. But still screw regulations. But they're here. We got to work with the SEC whether we like it or not. If we can at least have positive regulations, then that's a good thing. Negative regulations are bad. Anyway, you guys let me know what you think about this Defend Crypto Fund and Kin trying to take on the SEC in the courts down below. In the comment section, guys. That's where the comments go. Thank you so much for watching today's video. If you did enjoy it, leave a thumbs up on the video. Click the bell to know when I put out a new video. And if you are new around here, please subscribe to the channel to know when I put out all these fun and informative crypto videos for you guys. And of course, you guys are supremely freaking awesome. I love you all so much. So thank you so much for coming over here and watching today's video. Long live the blockchain. And peace out till next time.